of the four of you, I want to have hands in the air. Who's got a sector buy? Who would put a buy on the telecom sector today? I can't do that. So it's 2 out of 4. 2 out of 4. So and let's come to you two then, because you the buys. Let's call you the buys and you the sells. Them. Very simple, half and half. Robin, why are you a buy on this sector? Is it because of the single market for telecoms in Europe?
Well, I think one of my favorite things about today has been the irony of hearing that investors like this regulation and that multiples have been rising because of that, and also hearing the sage words of Mr. Stevenson, because actually I think that the reason the sector is doing well is because the regulation and the regulatory event has proven to be so inordinately time-wasting and frustrating and dead-end that actually I'm starting to see companies act regardless of that and start to act and trying to consolidate their markets. So I think that's part of it, and I think the other part of it is that, irony of ironies, the advice that we're seeking from the Americans that the US market has peaked and that the reason they are looking in Europe is because things are looking much less rosy in the US. So I think rather the contrary, it's not because there's a great single market and the regulation is so great. I think it's because the regulation is so lousy that people are starting to act regardless of it.
Scandal. The US isn't as good as they make out.
Yeah.
It's Stephen. You also had your hand up. Is it about the single market? Is it about regulations, or is it this wave of M&A we've started to catch?
I guess I don't entirely agree with that, but we have one common starting point, which is that the regulation has been absolutely lousy. And when I spoke at this event last year, I remember saying most investors literally recoil from the sector if you mention it to them. I think, though, if I look at the proposals that are on the table at the moment, and there are 3 sets of them, let's not forget, I think they are modestly encouraging. They do suggest to me that some of the worst of regulation is over and things are looking somewhat better. If I take the 3 elements in question, we've got some fixed line proposals, which glory under this non-discrimination and cost methodology recommendation name. And I think that does open the prospect of stabilising ULL prices in real terms and operators having the flexibility to set their own fibre prices. I've waited something like 17 miserable years to see operators given the outrageous right to determine their own pricing in an important product. It's been a very long wait, but it's very welcome to see. Then we've got the relevant market review, which I'm hopeful will identify that there are too many market segments at the moment and that there is scope for deregulation. And then we've got the single market proposals themselves, which, as we've heard today, are a mixed bag. There's sweet and sour in there. But I think the spectrum proposals in particular are a very important long-term positive. Of course, when you ask an analyst about what their views are on the sector, it's very hard to divorce this entirely from price. If the sector was valued perhaps as its US counterpart, then one could ask whether any of this is sufficient. And indeed, one should in any case ask whether all of this is sufficient, given the dire state of the industry in Europe. But I think if you put the valuation in Europe together with regulation that seems to be finally improving, that's why I'm overweight.
Thank you very much. And moving on to yourself, what's you put your hand down, which is unexpected actually. I thought everyone would have their hand up today, but it's tell me why. What's your concern?
Well, it is to do with the way you asked the question. You said, "Are you a buyer of the sector?" And I'm not a buyer of the sector. We have let's say, more balanced view of the sector. It's what Jonathan's hands were trying to do, but I would say typically as analysts. We try to focus on companies rather than on sectors. At least that's what I'm trying to do. And I think what we have seen is, and where we have a positive view, is companies are investing increasingly. I think one company is investing a lot more now with great success and good prospects. It's represented right in front of me. Deutsche Telekom, for instance, the investor reception to that has been very positive. The result has been evident, and I think the market is willing to support a more, let's say, constructive approach, more investment-oriented, more long-term approach now. Now, why is this now, and why hasn't it been the case maybe in the past? I think there's probably a confluence of a number of factors, but I think it's also that the conversation between investors and the industry has moved on from let's maximize capital efficiency and make return as much money as we possibly can to shareholders towards, I think, a more growth-oriented agenda. What I'm concerned about, let's say but this is, as Stephen has said, is from a broking perspective, as we call it. It's not necessarily a fundamental decision on what's going on. From a broking perspective, I think there are long lead times between what is happening now and the results that we might effectively be getting in some of the areas that we are talking about. And I think also a lot of companies are not yet at this point where they have embraced a more proactive agenda here. But we do have buy recommendations on companies that have historically invested and are potentially coming to the point where they are starting to see some real benefits. And they didn't feel too much hampered by regulation, but it's fair to say that in most cases regulation was somewhat more benign in the specific context than on average.
Jonathan, would you agree with that?
So, I mean, I imagine that if we listed all the stocks that we have buys on, holds on, and sells on, I imagine our recommendations would be nearly identical. So I suspect that. I mean, for me, I suppose the biggest problem is I put my arm like that mainly because it's been twisted behind my back from the reverse broking, from the regulatory lobbying, and probably everyone senses that same issue. So I think, I guess one of the biggest dangers is in 2 years' time, when the share prices have recovered, we'll draw a chart and the percentage of homes passed with 100 meg by 2020 won't have changed materially because we've actually watered down the definition of fibre. So I guess and Deutsche Telekom has done an excellent job of investing in VDSL, but the danger is they're not investing in fibre. So I fear that what happens is we actually disappoint society. So I know bankers shouldn't talk about this. There's a real danger that we're not actually engaging with investors and saying to them, look, this is a multi-year reinvestment plan. We're going to do VDSL, we're then going to do fibre, and actually, we need to get used to a completely different valuation investment metric. I mean, already in the UK, the House of Lords has run a couple of different debates arguing that, BT, the poster child of fibre, it's actually not real fibre. So I think, one of the dangers is we get very excited, the share prices run up, largely because Telefonica is making Telecom Italia sell Brazil. So really, or AT&T may well buy something large in Europe. So the valuations run up, we rewrite history that Ms. Cruz has succeeded, and then some bright spark says, hang on a second, it's actually supercharged copper. And we look down at Spain and we look at Telefonica and Portugal who have been courageous and invested, or Mr. Fries' comment at Liberty who took some risk and invested, and we start saying, oh, nothing actually changed. So I suppose perhaps you would have expected a more sort of stockbrokery response, but what worries me is we actually need to see more courage. Mr. Richard effectively listed a bunch of a bunch of targets for France Tel. I guess it'd be nice, they've been doing that for a long time, it'd be nice to actually see something happen.
I guess they can because of their financial constraints, potentially. But I mean, but to what extent, and this is a general question, is the benefits of these super fast next generation networks? To what extent, is there a pricing premium that can be charged anyway? I was talking to Portugal Telecom the other day. Good 4G, good fibre. I mean, fundamentally, people can't afford to buy it, so there's no great growth there. I mean, is this just an economic story, effectively? Discuss.
So, as a UK citizen where fixed prices go up and mobile prices go down, every time I renegotiate my iPhone contract with T-Mobile, I feel sad because I know as I walk out of the store, the next guy in gets a better mobile deal than I've got for the next 2 years. every 2 years when I renegotiate my Virgin Mobile contract and I lock them in for a 6-month discount, I feel like a winner because I know I've saved myself money. So I think there's a human trait that dislikes price deflation. And so, you know, why couldn't prices go up if the service actually got better? You know, this industry owns factories that make, for argument's sake, let's call it shoes, but we didn't invest in the best type of rubber or the best type of stitching. We invested in the box because the box is pretty cool. You know, if you look at how much money different companies spent on content, Bundesliga rights, French, you know, really a lot of it was wasted. You know, would we be in a different place if the quality was higher now? You know, you know, it's an interesting question. Would you pay as a consumer more for better quality? And is the lack of quality the problem?
But you can't really know that if it's not being built. And that's the point, is that the US has been in a kind of charge more for more world for a long time because of the great good fortune of the nature of the country and the size of it and the economies of scale there, whilst Europe has been in a less for less mentality for a long time. I would say that I do agree with you that the fiber deregulation is a modest step forward. And, you know, you can from VDSL, you know, push the fiber deeper. So maybe you get there with very, very small steps, like so much in Europe. But what would be really important, and I think that the consolidation does matter to that end, is getting into charging people more for more. And the only way you can get there, as you point out, is to actually, you know, put your money on the you know, where your mouth is and try.
Stephen, you've done a lot of work into the you know, different generations of fixed line. Is that something which is borne out by the research you've done?
I mean, I do think the industry has been really poor at explaining, and this is one of the comments earlier after all, wasn't it? Really poor at explaining what it has accomplished and what it has delivered. Because, I mean, the reality is that in almost any product that you look at, you've got rampant, you know, really rampant deflation. Even if the price of the product, i.e. the price of the package, appears to rise. If you look at it on a per unit basis, I mean, you know, when I moved from copper ADSL to fiber to the node VDSL, I was actually getting my gigabytes cheaper. I paid a little bit more, but I had so much more download capacity that the actual unit price fell. I think it's one of the things that, amongst other things, that the industry, I think, could have communicated better with regulators and politicians. I mean, just to move on to the point about consolidation, I mean, this is obviously absolutely pivotal. And obviously I recognise that we are billed as an investor panel. We are, of course, not investors. We speak to the good people who, to the regulators in the audience, the good people who put up capital to the industry, and, you know, who have a moral and fiduciary duty to earn a return upon that, and hopefully pay all our pensions and give us a return on our savings. It's a terribly important thing. And, you know, in order to convince these investors that European telecoms is the right place for their capital, you know, clearly they need to see an attractive return profile. And if the investors were up on this panel, I'm sure what they would be saying is that, you know, better regulation is certainly helpful, and my view is it's moving in the right direction. But the missing part of the puzzle is quite clearly in-country consolidation. That is absolutely pivotal. And if I go back to the earlier exchange between Ben and Stefan and Tim, you know, I thought that you know, what emerged from that was, in effect, a suggestion that the industry needs more constructive engagement. Right? It needs to put stuff on the table. I quite understand why the industry spends so long complaining. You know, if I were regulated like this, you know, I'm sure I would too. But we now need more than that. We need constructive engagement with the regulator. And so I was quite encouraged by some of that discussion earlier. Consolidation is the pivotal question there, clearly.
Yeah. I mean, if investors were up here, would 82% of them agree with the single market proposals as they stand, as Neely Crowe says, do you think?
Well, I think in terms of the single market proposals, they are quite complex, and I think for investors they are quite difficult to comprehend, and in particular there is a difficulty to see how much of it will remain on the table. So I think investors, as far as I've perceived it, are suffering from a bit of a single market fatigue at this point because they have sort of gone through ups and downs here, and I think they will reserve their judgment. So I think the reasons for the strength in the sector are less related to it right now, although I think they are more related to the general perception that Brussels is trying to, despite some appearances to the contrary earlier today, is trying to be to pursue a more industry-friendly agenda. And I think the NGA recommendation process, I think, has given some evidence for that. It's interesting that against that context, I'm sensing that the Commission doesn't enjoy much trust with its single market proposals within the industry. So that's clearly a conversation maybe that can still be had, or maybe after next election. But on your previous question, I think there is actually demand for broadband. We recently put out a report which was called Build It and They Will Come, which is challenging the old paradigm. You know, when I joined the industry, there was about half of the capex was probably overspent in a very inefficient way. I think we are now at a point where capital discipline or capital spending discipline is part and parcel of good, practice in European telecoms. I think operators can be trusted to make decent investments in infrastructure, and I think the investor fear of companies to simply, because that was the fear 15 years ago, that operators would just basically cover the street with platinum-plated networks. And, Tim, I'm sure you remember that. Platinum-plated networks, and then, there would be a huge wastage. I think that's receded. And if I look at some of the investments that have been made, for instance, in the United States, from a European mindset, they seem wasteful. Right? Was it really ideal for Verizon to roll out LTE just then, or would it have been better if they had waited a year and this kit would have been 30-40% cheaper? That kind of thinking was very characteristic. I think it's turning, and I think the investors are supportive of this agenda. In terms of the consolidation question, again, I think there's one point here about regulation, and we don't know what has been discussed and what hasn't been approved, and I think we were all horrified, I guess, by what happened in Austria in particular last year in terms of the conditions that were imposed, and clearly nobody would like to have that another time. At the same time, I think when you think about what might drive consolidation, one thing is to say, here we are, the regulators give you a carte blanche. The other thing is to drive consolidation through investment. And if I see, for instance, what has happened take Germany, it's that the two large operators in the German market have essentially driven a US-style agenda where they have out-invested the competition, and the competition found itself and have invested in a fixed line. So the smaller guys in the world of some convergence felt this is going to be quite difficult to, they changed the terms of the game, let's say it this way. And if you raise the terms of the game in our industry, you can drive consolidation. And as an investment agenda, there's a lot that the industry can do. And it's not all about reducing the number of operators in the first step. And, which could actually lead to, potentially to regulation that might look benign at the beginning, but could get worse. Once you introduce MVNO regulation, you have to be careful whether you got what you've asked for.
Does anyone get any smoke signals from Almunia about where he might be positioned on Germany yet? Are we feeling confident? Well.
Are you reading a lot in the papers?
Don't believe all you read. It's great. So it's obviously a busy time for M&A, but in terms of the, I wasn't aware I was going to go with that. It's so we got the established. So, Jonathan, where do we go now for an investment case? Is it all about the next technology? To what extent will people buy on the technology, on the regulations? Is it purely about consolidation?
So I think, sort of following with I think investors would answer any question around which investments they actually had. So, I guess they'd pick and choose and say, I really would like my investor, my company, not to spend a lot of money, not to pay 10 times buying stuff. I'd much rather own the company that got bought for twice its current multiple. So I think there's a danger that you need to be careful picking and choosing who you speak to. And I think sometimes panelists like ourselves are quite good on the industry, actually. Because, the danger is you'd get a Jazztel investor who would happily see Vodafone buy them. Counter to perhaps, and probably be very upset that Orange would do that. So, but I think the companies themselves do need to engage in a new world that says, begins to draw out the examples of Portugal Telecom has actually gained market share in pay TV and broadband and stopped line loss. Swisscom has made these achievements. Iliad created a mobile business, at the detriment of the others. Deutsche Telekom has done an excellent job of creating, I think there are probably as many good examples of where investment has worked in the last 5 years as there were going back into the mid-80s and 90s where it was clearly wasted, as Hannah's mentioned.
I think there's a really interesting theme also, which hasn't really been discussed. There's been a lot of talk about mobile and a lot of talk about fixed and not a lot of talk about the fact that increasingly the lines between the two are blurrier and blurrier. So what would be interesting to know is what does Almunia think about that? Because at the moment we have sort of market definitions which are very much wireless and wireline, and the reality is that in the way the numbers are reported and in the way the service is delivered, the two things are really increasingly becoming one. Yes, we all consume it through wireless devices, but it is delivered through an integrated network. So I think the other way that you're going to see consolidation is sort of backdoor consolidation, which is the reality that the winners are going to be these very large integrated networks, and then the little niche players who survive on the fringes of that kind of environment. So you may well see, I think, in-country consolidation around big integrated players, and then a series of little niche players that survive around the edges.
It's an interesting point that I guess the Vodafone-Kabel Deutschland merger Kabel Deutschland standalone would definitely, within a few years, have been one of the most disruptive actors in the German mobile market. I imagine they never will now, unless Vodafone lose their mind. So, I guess you could get away with any number of mobile fixed line. Presumably, if Orange looked at Yoigo, there'd be a huge multi-year, at least 12-month process. They could presumably remove a fixed line competitor in 3 months. As you mentioned, there's very little sort of real oversight of what matters going forward.
I think one thing Almunia seems to have been clear on is the fact that he wants to have cross-border mergers, actually, rather than within-border mergers. To what extent does that make sense? From an industry point of view, from an investor point of view, from a company point of view. I had one executive telling me a couple of weeks ago that he could see maybe 2 or 3 pan-European, Unilever-style telecoms groups based out of whatever domicile, but spread across the region and competing on that level, very successfully against the 3 in China, the 4 in the US, and so on. Is that
London-based?
The trouble is you cannot sell that to the financial markets unless you have in-country consolidation to accompany it. So there is a quid pro quo to be had there, I suspect. I think it's difficult to see how the machinery of Brussels gets to that compromise. But plainly we have regulators who want pan-European, and we have investors who want in-country. I think the prospect of some of, let's say, the US giants taking a close look at European telecoms, perhaps that will concentrate minds. But we need a more joined-up thought process here. I guess the issue is that this involves industrial policy potentially entering the turf of merger control, and that is a politically, bureaucratically challenging area for understandable reasons. One other point I just want to make, follow on from Robin's comment, is surely the time has come that when merger control analysis is conducted, serious account is taken of over-the-top players. I really do wonder to what extent the market presence and the price constraints exerted by these players was taken into account, when assessing the competitive effects of the 4-3 merger in Austria, and they really need to be.
On your question related to pan-European consolidation, I think that the evidence is not supportive at this point in time of let's say large groups being superior in execution to smaller operators. I mean, I think we have one industry executive has once called it imperial overstretch. I think there is currently actually a retreat going on from that. So scale is actually difficult to sustain, and one of the reasons is, as Robin has mentioned, that I think the paradigm is becoming one of a more convergent. Becomes more convergent, and many of the groups that we have let's say, a mixed bag of either converged or not converged operations. Some are startups, some are developed, some are integrated, and so on. It's actually quite hard to manage. In one country, you are an attacker and have to fight the regulator on one front, and another, you have the opposite hat on. And if you are a big global group, it's actually very complicated. It requires excellent execution. At the best of times, difficult. So maybe as technology changes, and maybe as a consequence of a more of a single market implementation that will surely take a very long time to become a reality from a cultural and market reality point of view, it becomes easier to do. But even the US operators that are very successful, I think what in terms of attracting higher valuations in particular, and the common denominator is they are single market players. And one thing that results in is that they say, this is where we are, Hague Road, Hague Salter, right? This is where we have to deliver. And if you look around, which companies have invested the most, it's the ones who had no choice but to take care of their home market, right?
Excellent stuff. Well, I think with that, we'll have to bring it to a close. Unfortunately, we haven't got time for questions from the audience. Well, maybe one, if anyone's got any quick questions. Fair enough. It's great. Thank you so much for listening to us, and thank you so much, guys, for talking very authoritatively about the sector, about the single market, about consolidation, particularly on everyone's minds. So with that, can I thank the panel, please?